How would you like to drive this as your company car? However, your private bank gets paid for it. But once you start driving it, you really start to understand some of those things like the sound. It's that race car sound that you get driving one of these 6,000 plus pound vehicles. I mean, you can't really pay too much for that. Doesn't that make sense, Cash? Cash is king. So I just bought a Mercedes, commonly called a G-Wagon, and the best part about it is I get paid to drive this truck. To make this work, I use my own privatized bank with the Money Multiplier. And if you don't have your own privatized bank or even know what that is, you're going to want one by the time this is done. So we put a little link in the description to help you get started. This is just one way out of an infinite number of ways to use your privatized bank. So, before I show you how this works, there's really 4 different ways that you can buy a car. I mean, let's think about it. You can buy a car for cash. And if you buy a car cash, the reason you would do that is you got the money sitting in an account somewhere and you don't want a monthly payment. But the problem with buying a car cash is you give up control of that money and you lose the earning potential on all of that money forever. And what you get in return is a depreciating vehicle that will be worth far less later. The second way you can buy a car is you can go and finance the car. And in that, you exchange monthly payments to a finance company in return for the car. And after a certain amount of time, the car is paid off. But you've given up interest payments to this finance company. And the third way, and really the most common way today, is leasing a car. Now, why do you lease a car? Most people would say, I leased because the payment was lower. And that is the most common reason somebody would lease a vehicle. But not only that, you might want tax write-offs for your company, which would be another common answer for why you'd lease a vehicle. But I did say there was 4 ways, right? Well, the 4th way isn't one I'd suggest, but you could always steal the car. But we're not going to do that. So let me walk you through how I did this. But how I did this was I had the money to pay cash for a car, but I wasn't willing to give up control of that money. Nor did I want to exchange that money for a depreciating vehicle, the G-Wagon. So another really cool thing about the Mercedes G-Wagon is it's over 6,000 pounds. And there's a tax credit that you can get called the Section 179 that allows you to get a tax deduction for a big portion of what you would pay for the vehicle all in the first year. But I'm getting ahead of myself, so let me take you through the process. So here's what I did. I took money that I was saving in a regular account and I changed just one thing. And I changed where that money went first. Instead of putting it in somebody else's bank, your traditional bank that you put your money in, I decided to put the money in my own bank, my privatized bank. And how that looks is just like this. So here's what I did. Instead of depositing money in a regular bank account, I changed where that money went first and I put it into the Money Multiplier policy, which, what is this Money Multiplier policy? It's nothing more than a specially designed and engineered whole life policy. So I, before this, was putting $1,500 per month into a regular bank account. So I put $1,500 a month into my Money Multiplier account. And the nice thing about this account is it pays me a guaranteed interest rate. Not only that, I get paid dividends every single year. They're not guaranteed, but the 4% guaranteed interest is. So now this plan is much better than my regular bank account because I'm earning interest. Then what I'm going to do is when I save enough money to buy the G-Wagon, which I did, I'm going to take that money out of this policy in the form of a loan. Now, if you went to the car dealership to buy the G-Wagon or a private seller, you would have to probably take a loan out or do some type of financing to buy this. Well, I'm going to treat my money the same as I would treat the bank's money. Even though I have enough money saved to buy this vehicle, what I'm going to do is I'm going to take a loan for that amount. So the G-Wagon was $63,000. So I'm going to take $63,000 from my bank and I'm going to then put it into their bank. As you can see, so we got now $63,000 sitting in what we're going to call the segregated bank account. The segregated bank account is nothing more than a regular bank account, but I just use it only for my banking purposes. Now what I'm going to do is I'm going to go out and buy that vehicle. So as you can see on here, this is the G-Wagon. Now that I bought the car, what I want to do is I want to make the same monthly payments that I would normally make to a regular bank back to my bank. Because if you financed this car or even leased this car from a dealership, you'd have a monthly payment. And I did the math, and I want to show you how I did this. So there's a lot of calculators you can use to figure out what your monthly payment would be. But let me show you what I did. I was saving $1,500 a month prior to that in somebody else's bank. And I just changed one thing. I changed where that $1,500 a month went. And I put it into my own private bank. So let's come down and let me just show you how this works. If I'm saving $1,500 a month, I'm putting that into this plan, and this plan is going to pay me a guaranteed interest rate as of today of 4%. Then I'm every year going to get a dividend on my money that's accumulated in that plan. So that's the reason why I would want to use my bank versus somebody else's bank. Because somebody else's bank, your traditional bank, they're going to be making interest on your money versus you making interest on your money. So then what I'm going to do, remember, I buy this G-Wagon. Now the G-Wagon is $63,000. That's how much it is. Now, a lot of you are probably thinking you can't buy a G-Wagon for $63,000, but you can buy a used one. I never buy new vehicles because the second it rolls off the lot, you lose all the depreciation right there. So if I just buy one that's a few years old, I already get a much better deal. So this G-Wagon that I bought is $63,000. So in order to buy the G-Wagon, what I'd have to do is treat my money the same way I would treat the bank's money. And if I went to a bank, they would give me a loan for $63,000 and they'd charge me interest on that loan. Now, how much would your bank charge you on a $63,000 loan? Well, that differs for different people, but let's just assume it's 5%. So what I'm going to do is I'm going to charge myself the same exact interest rate that the bank would charge me to buy this vehicle. Again, I'm treating my money the same as I'd treat the bank's money. And now I've got $63,000 after I've taken that loan sitting in my regular bank account. And you can see right from the screen, it's segregated bank account because the only thing I'm using this particular bank account for is the $63,000. And then I go and I buy the vehicle, and that's the fun part. So now I've got a $63,000 G-Wagon. And that G-Wagon, if I did the math, and let me just show you how I did this, because there's calculators you can use online. So follow with me. So if I go into this calculator and I put in $63,000 at an interest rate of 5%, and there's another reason why I used 5%. So when I took that loan from my private bank, the insurance company actually gave me money from their general account, and they're going to charge me interest. And that interest rate is 5%. So just so you know where I came up with the 5%, that's where it is. But 5% isn't much different than what you'd be able to get a loan from a bank for. So if they're going to charge me 5%, then I got to figure out what the payment would be. So over 5 years, which is the term in which I want to buy this vehicle, those monthly payments are going to be $1,312.50. So if I were to pay $1,312.50 for a period of 5 years, the interest that I would have normally given to somebody else's bank is $15,750. Just remember that number because that's an important number. What we want to do is we want to pay ourselves that interest. But now let's go one step further. This is where this gets really fun. For any of you that have a business like I do, you can get a lot of benefits by leasing vehicles through your business. So now, if I were to just take this G-Wagon that I just bought with my private bank, and if I were to structure a lease to my company to lease this vehicle, the cool part is why do we lease? We went over this earlier. We lease vehicles because the monthly payment's lower. And the last time I checked, if you have a business, chances are your business operates with more cash flow being a good thing. So we want a lower payment. But how can we get a lower payment on this G-Wagon? It's simple. What we're going to do is we're going to go to this website. This is what I use. So check this out. So this website will allow you to calculate your lease payment. And if we take the same numbers we just used, $63,000, okay, and we put it in, but when you lease a vehicle, there's several things that you probably don't ever look at. Number one, if you were to go to a dealership and lease a vehicle, they're going to put in a residual value. What that means is after the 5 years, when you turn this G-Wagon back in, they know that G-Wagon has some value left. So what we're going to do is we're going to assume that this 5-year-old G-Wagon, when we turn it in, is going to be worth $38,000, not $63,000. And I will tell you that one good thing about G-Wagons is they hold their value really well, which we'll cover that in a bit. But that's the reason I want to basically lease it, because there's a residual value. But the second part about a lease, as you can see from this calculator here, is we get to build in an interest rate. I bet you most people never even look at how their lease is structured and look that they're actually giving up interest to the finance company or the leasing company. I'm going to build in what most dealerships would, about 8% in interest. Now that 8% in interest is an arbitrary number when we're looking at this, because why do we lease vehicles again? A lower monthly payment. So if we do a 5-year lease on this G-Wagon with a residual value of $38,000 and an 8% interest rate, my monthly payment is $760. How many of you would rather pay $760 a month to lease a G-Wagon versus paying $1,312 to actually buy that vehicle and finance it through a bank? I think you all would take $760. So if I just lease the vehicle to my company, what's going to happen now is after the 5 years of me driving this vehicle, my company has paid those payments every single month of $760. So I got to drive a company car, and my bank, the private bank, got to receive $760 every single month in payments. So let's go over the numbers on the lease. Remember, first, we started with a $63,000 vehicle, being the G-Wagon. And we put a residual value of $38,000. And the residual value is just saying after 5 years of driving this awesome truck, the car should be worth $38,000. That would be our residual value. All right, this is done by every single finance company that does leasing or any dealership you go to. They're always going to build in this residual value because the car does still have value after you're done with it. And with that residual value, I mean, how many of you would like a G-Wagon for $38,000? I think all of you, but that's just what we're saying the car is going to be worth 5 years from now. Now, the other thing we got to do is we got to build in an APR, an interest rate that's going to be charged. So the 8% interest rate, the reason we got 8% is we looked at what the most common interest was on leases, and 8% came up quite a bit. And if we did that, remember our monthly payment on this vehicle was only $760 a month. So that means our company, who is the one that leased this vehicle from our private bank, is going to make $760 payments every single month back to my bank, or it could be your bank. And if you did that, the interest that you would gain, so the amount of interest that you would have normally given up to a finance company, but here, because you are the bank, you actually keep $20,615. But now we got to really look at something important here, because remember, our bank bought this vehicle, and when we did that, we did it with a loan from the insurance company, and that loan was 5%. So we got to factor out the 5% and the 8% that we're charging on this lease. And if we did the interest spread, which is the important part here, the interest spread on this particular deal is $4,865. So what that means is we actually kept interest payments of $4,865 that normally would have went to somebody else, and now we get to keep that. But here's the other thing. In 5 years from now, do we think that this G-Wagon is going to be worth more than $38,000? And the amount that those 5-year-old G-Wagons were selling for was roughly $50,000. So if we did $50,000, which is the sale price in 5 years, minus the $38,000 that we put in for residual value, that means we're actually walking away with $12,000 in profit on that vehicle. So how much did we actually put in our pocket to drive this company car, this G-Wagon? Well, $12,000 plus the interest spread that we made of $4,865. So the total amount my private bank, or me personally, made on this particular G-Wagon is $16,865. That is the amount that I got paid to drive this vehicle for 5 years. And that assumes that I sold the vehicle. The other cool thing is, if you remember earlier, I was talking a little bit about a tax credit, a 179 deduction. So if you really look into the 179 deduction, and make sure you consult with your CPA, but the 179 deduction allows you to take a vehicle that's over 6,000 pounds and used for business, and you can deduct up to $25,000 of that purchase price. So if I get a $25,000 tax write-off for buying this G-Wagon and using it for business purposes, that also is money that I didn't have to pay in taxes that actually could be added to the bottom line. But that might just be going too far, but I just wanted to show that just because that's an important thing to look into if you're doing this. So let's go back to the top and just look at this diagram again to show you exactly how this whole thing happened. Now remember, I was using my own money that was saved in this privatized bank, and it took me a couple years to save this money up to buy this G-Wagon. But I was saving $1,500 every single month, and if you remember, I put that $1,500 into my privatized bank, the Money Multiplier account. I then took a loan from my policy, which is essentially the insurance company giving me a loan of $63,000 from their general account, and then just using my money to collateralize that. So I have $63,000 that buys the G-Wagon, and the insurance company is going to charge me 5% simple interest on that. But then what I did is I took that G-Wagon and I lease it to my company, my LLC. And the reason my LLC wants to lease the vehicle is number one, for tax write-offs. Number two, I get to drive a company vehicle for a lower monthly payment. Now that lower monthly payment, if you remember from the calculator we used, was $760 a month, not the $1,312 that we would have had to have paid to someone else's bank, because now I'm leasing it from my company for $760. And we're going to do that for 5 years, and after the 5th year, that vehicle, the lease is over and the car goes back to my personal bank, which is just me. I want everybody to understand my bank is just me. So now I'm holding the G-Wagon, and what I do is I turn around and I sell that, and we assumed selling the G-Wagon 5 years from now at $50,000, which resulted in a profit because if you remember, the residual value was $38,000. So if we put in a $38,000 residual, that means anything above and beyond 38 grand is true profit. That's how I made money for driving a company car. And this isn't the only car that I've done this on. I've done this several times. I did it for an Audi A8. Then I did it again for an Audi S4 Avant, two pretty sweet cars. And again, I did that with those cars for a much lower monthly payment than I could have ever bought the car for, or probably even leased the car from a traditional financing company. But again, don't forget the reason we did this is we get all the money back for all of these cars, and we get to drive company cars and get paid for it. I think what you have to really ask yourself, and this is what I had to ask myself, is who do you want to pay monthly payments to? Do you want to pay them to Mercedes and drive the nice vehicle like we're talking about, or do you want to pay those monthly payments back to yourself? Because really the decision is yours. Sure, I had to wait a couple years to save enough money to be able to do this, but once I was able to do this the first time, I now have the ability to do this every single car that I ever buy. And if I did this for every car, I make more and more money, because the one thing I didn't talk about in that description is the fact that my private bank, that specially designed and engineered whole life, every penny that I put into that bank, even though I took it out as a loan, all of that money is earning interest and dividends. It's called uninterrupted compound interest. And Albert Einstein talked about this a lot. He called it the eighth wonder of the world, the greatest thing and the most powerful thing in the financial world. And he said those that understand it earn it. Those that don't pay it. The theory of this mathematical equation simply states this: those that understand compound interest shall earn it. Those that do not will pay it. Which side do you want to be on? I then called it the eighth wonder of the world. We have been brought up to believe that we always have to pay interest to somebody else because we don't understand uninterrupted compound interest. Well, I learned how this worked, just like you just saw how this worked. And once I saw how much money I was giving away to everybody else's bank, I knew I had to change something. And what I had to change is who got the monthly payments, who received the interest payments I was making. And in doing this, you see that when I lease this G-Wagon to my company from my private bank, my company gets a lower monthly payment, and my company is also paying interest back to my bank instead of somebody else's bank. That's the whole idea. That interest accounts for $20,615. Even though we got to pay some of that interest back to the insurance company on that loan that we took, I still end up making all of that extra money. So again, I would ask you, do you understand compound interest. And you understand how to earn it, not pay it. I learned that, which is how I was able to get paid to drive this G-Wagon. So if you just buy a car from a dealership, or if you just lease a car from a dealership, you're leaving a lot of money on the table. In the lease, you're giving all the interest up and you're giving the car back after paying years and years of monthly payments. And if you pay cash for a car, you're actually giving up the earning potential on that money. And then you're getting a depreciating vehicle, which no matter what, cars always depreciate. This concept, what you just saw that I was doing, allows you to control your money, allows you to earn uninterrupted compound interest on all of your money, while still getting the benefit of driving the vehicle that you want and getting all the money back. So if you want to learn how to get paid to drive company cars like this, then click the link in the description and we'll show you exactly how. And not only that, if you really want to get into this, subscribe to my YouTube channel right below. Actually, no, smash that YouTube subscribe button.